What's up, money mavens? If you're tired of earning peanuts from your savings account, this video is for you. Keeping cash in the bank has become a risky game, thanks to low interest rates and economic uncertainties. The phrase cash is king has lost some of its validity, giving way to more robust and dynamic financial planning. The key to sustainable financial health often lies in not the bank vault, but in a diversified portfolio of assets that offer better potential returns and safety than traditional cash savings. Here's the hard truth. Parking your money in a bank is like letting it gather dust while inflation eats away at its value. It's time to break free from the shackles of traditional savings and explore assets that offer better returns and safety than cash. Welcome to MoneyWise Investor, your trusted source for financial information. In this video, we'll dive deep into 4 assets that have historically outperformed cash savings in terms of growth and protection against economic turmoil. These assets have the power to transform your financial landscape. But first, let's take a closer look at the cash flow quadrant to get a better view of what it is and where you currently stand in terms of your financial situation. The cash flow quadrant is a concept popularized by Robert Kiyosaki, the author of the bestseller book Rich Dad, Poor Dad. This quadrant divides people into 4 categories based on their income sources: employees, self-employed, business owners, and investors. Have you ever felt stuck in a cycle of working hard but never truly get ahead financially? That's because many of us are trapped in the employee or self-employed quadrants. Take a moment and ask yourself, where do I fall in the cash flow quadrant? If you're an employee, you're essentially trading your time for money. You work for someone else's business, and your income is limited by the number of hours you can put in. Sound familiar? Now, what about being self-employed? Sure, you can have more control over your schedule, but at the end of the day, you're still trading your time for money. You're like a high-skilled employee who works for themselves, but without the benefits and security that comes with a traditional job. Imagine this scenario. You're a freelance graphic designer, and you charge $20 per hour. If you want to double your income, you have to work twice as many hours. That's the trap of being an employee or self-employed. Your income is directly tied to the time you put in. But what if there is a way to break free from this cycle? That's where the business owner and investor quadrants come into play. As a business owner, you create systems and hire employees to generate income for you. Instead of trading your time for money, you're leveraging the time and efforts of others to build wealth. You're the one calling the shots, not just following orders. Picture yourself as the owner of a successful restaurant chain. You've built a solid brand, developed efficient systems, and hired a talented team to manage daily operations. While your team is hard at work, you're free to pursue other business ventures or simply enjoy the fruits of your labor. That's the power of being a business owner. But what about the investor quadrant? This is where true financial freedom lies. As an investor, you generate passive income from your investments in various assets, such as stocks, real estate, and businesses you don't actively manage. Imagine owning rental properties or investing in a thriving startup. You've put your money to work and it's generating income for you, without having to clock in and out every day. That's the beauty of passive income. It allows you to build wealth while you sleep, travel, or pursue other passions. Now that you have a better understanding of each quadrant, it's time to assess where you currently stand and determine your desired path. But before we dive into the 4 alternative assets, let's address the elephant in the room. You might be thinking, but I don't have a lot of money to invest. How can I even start exploring these assets? Fair question. But here's the thing. You don't need a massive bankroll to begin. It all starts with a shift in mindset. Instead of thinking like an employee or self-employed individual, you need to start thinking like a business owner or investor. It might mean taking calculated risks, learning new skills, or finding creative ways to generate extra income that you can reinvest. Remember, every successful investor started somewhere, and often with very little. So, let's talk about these 4 assets that can outshine traditional cash savings and set you on the path to financial freedom. Number 1. Business assets. Have you ever dreamed of being your own boss? Or creating something from scratch and watching it grow and thrive? That's the beauty of investing in or starting a business. Unlike a job where you trade your time for money, a successful business can provide passive income and scalability. Imagine owning a thriving e-commerce store that runs on autopilot, generating income even while you sleep. Or picture yourself as an investor in a promising startup, reaping the rewards of its growth without actively managing the day-to-day operations. But wait, you might be thinking, starting a business sounds risky and expensive. That's a valid concern, but there are ways to mitigate the risk and start small. Have you ever considered starting a side hustle or a service-based business that requires minimal upfront investment? Think about it. You could offer your skills as a freelance writer, graphic designer, or virtual assistant. As you build your client base and reputation, you can reinvest your profits into scaling your business or exploring other opportunities. Number 2. Real estate assets. When it comes to building wealth, real estate has long been a favorite among savvy investors. Unlike cash savings, real estate assets have the potential to generate passive income through rental properties and appreciate in value over time. Imagine owning a few rental properties in a desirable location. Not only would you be collecting monthly rent checks, but you'd also be building equity as the property values rise. It's like having a money-making machine that works for you, even while you're on vacation or pursuing other endeavors. But real estate investments aren't limited to residential properties. You could also explore commercial real estate, such as office buildings, rental spaces, or industrial warehouses. These types of investments offer higher returns and longer lease terms, providing a steady stream of income. Now, you might be thinking, but real estate is expensive, and I don't have a ton of money to invest. That's a valid concern, but there are alternative strategies to consider. Have you heard of real estate crowdfunding platforms? These platforms allow you to invest in real estate projects with relatively small amounts of capital, making it more accessible to everyday investors. Number 3. Precious metals. When economic storms brew, savvy investors turn to precious metals like gold and silver as safe haven assets. These precious commodities have a long history of preserving wealth during times of financial turmoil and economic uncertainty. Picture this: the stock market is a tailspin, and currencies are fluctuating wildly. In times like these, precious metals shine as a reliable store of value. Their limited supply and universal demand make them a valuable addition to any diversified portfolio. But precious metals aren't just a defensive play. They can also offer growth potential. As global economic conditions shift and demand for these finite resources increases, the value of your precious metal holdings could soar. You might be thinking, but investing in precious metals sounds complicated and expensive. That's a common misconception. In reality, there are accessible ways to add precious metals to your portfolio, such as buying gold or silver coins or investing in exchange-traded funds, also known as ETFs, that track the prices of these precious commodities. Number 4. Commodities assets. Commodities like oil, agricultural products, and natural resources are all essential components of a well-diversified portfolio. These assets can not only hedge against inflation, but also provide exposure to industries that drive global economic growth. Imagine investing in a commodity like oil, which powers transportation and manufacturing industries worldwide. As the demand for energy increases, your investment could reap substantial rewards. Or consider investing in agricultural commodities like corn, wheat, or soybeans. With a growing global population and changing dietary patterns, the demand for these staple crops is likely to rise, potentially boosting the value of your investment. Commodities offer an opportunity to diversify beyond traditional stocks and bonds, providing a unique source of returns that can help mitigate risk and enhance your overall portfolio performance. In conclusion, in this age of economic uncertainty and low interest rates, it's crucial to rethink the way you approach wealth building. Keeping your hard-earned money stagnant in a bank account is no longer a wise strategy. Instead, embrace a dynamic mindset and explore these 4 assets that have the potential to outperform cash savings while protecting your wealth from the eroding effects of inflation. Remember, the key to success lies in understanding where you stand on the cash flow quadrant and actively pursuing opportunities that align with your financial goals. Whether you're an employee seeking passive income streams, a self-employed professional looking to scale, or an aspiring business owner or investor, these assets offer a path to financial freedom. So, what are you waiting for? It's time to break free from the shackles of traditional savings and embrace a more dynamic approach to wealth building. And if you found value in this video, do us a favor and smash that like button. Better yet, share this video with your friends and family who might be seeking new avenues for financial growth. And don't forget to subscribe to our channel and turn on notifications so you never miss out on our latest money-making insights and strategies. Thanks for watching, and until next time, stay money-wise.